Hi, and welcome to this week's Fit Finance sessions with myself, Tom Senegals, and Henry Elliston and Tim Webb. We've done this session a little bit later today, so we've just been privy to Boris's announcement. We didn't pay too much attention, but Tim, give us the lowdown on what Boris has suggested and what that could mean for markets and investments in general.
Yeah, well, generally speaking, I think there's a couple of unwinding rules coming through. So I think at the beginning of March 9th, I believe, schools are back on track. It's obviously good for those parents that have been exactly our good friend Henry. Those parents, bless them. And I think March 29th is, do you know, it's just slipped my mind.
Is it six to meet in public spaces?
Yeah, that's it. Yeah, so that rule, which we're all familiar with from last year, back to the old rule of 6 outdoors or 2 households, however many people that entails, and then a couple more rollouts towards April, May, and June. I believe it is retail and gyms and what have you. So clearly more unravelling, economy cracking on back to its old ways, which in turn should translate into continued stability, at least, or if not growth in the market, which will be pleasing to us and all the listeners, hopefully. Yeah, so I mean, at the moment, it seems to be more good news, isn't it? I mean, I think vaccines are continuing on, rolling on as they are. There's a bit of the supply worry, wasn't there, a couple of weeks ago, but that seems to have sorted itself out. So yeah, it seems to be a good place. The market seems to be a good place as a result of all this.
Yeah, and I think those unloved stocks like Cineworld, restaurant groups, that they've started to come back a bit in anticipation of this. But actually, when things start to open, they'll the ones that have been quite well, who've maintained liquidity, will should see some sort of progress back again. So hopefully that helps portfolio. I unfortunately can't get a haircut till April the 12th, I think, but I can have Tim come and cut in my garden from March 29th. So at least we can have a go. Henry,
I was just going to add to that. There's some other quite interesting news over the weekend about the economy getting better, about unemployment rates that look like they might have peaked now, which would be amazing. Apart from hospitality, the obvious sector that they might not have peaked, and they think there's a terrible worry that the further might make a whole load of people unemployed. But lots of other industries are looking now to employ. So they reckon peak unemployment might have been reached, which would be really great for the economy through the rest of the year. Yeah. If that is the case.
Yeah. And I think that's it. I think a lot of businesses, most of the businesses that aren't severely impacted, like leisure and tourism and certain sectors, have kind of adjusted to this this new normal, as it is being called, and will be able to expand from now. And then these other ones will come back, and then hopefully that stimulates the economy going forward. And a lot of the stimulus should help that. What might not help companies is an increase in corporation tax. So Henry, do you got any thoughts?
Yeah, well, it's the budget, of course, coming up next Wednesday. High day and holiday for us financial planners. Looking very much forward to it. And so corporation tax at the moment 19%. It's one of the lower corporation taxes around. And some of the press are starting to talk up the idea that my mate Rishi might be looking to increase that, probably by 1% at a time, but towards the end of the parliament being up at 23-24%. It's always interesting, isn't it, with corporation tax, because it doesn't really seem to affect the man on the street. So it's probably not bad. It's not bad in terms of votes or losing votes, but equally, having gone through Brexit, you now imagine that the government's in a position whereby it wants to encourage investment within the country to try and really get businesses up and flying. And so by putting up tax on business, it's probably going to work counter towards that goal. So it'll be interesting. I think it needs to be balanced quite carefully as to what they do. Interestingly, the personal tax, actually, so a lot of the news coming through now doesn't look quite as bad as it might have been. So whereas CGT rates might have been 45%, some people were talking about a week or so ago. It now seems that actually it's going to be far more measured on CGT tax and capital gains tax rises, perhaps. So we'll wait and see.
Yeah, I think there's definitely a consensus of businesses were given the support, so therefore they'll pay for the support, and they're trying to take that burden off individuals. I mean, it's all in the round, isn't it? If you're employed by a business, then if that business is suffering, then you're probably going to feel the effect of that. But I think it'll be interesting to see what they do. They obviously want to attract investment into the country. They obviously are a bit bullish on still being able to do that. And I think the UK does have a good place in the world in terms of fairly easy to do business in terms of other things. So, and will an extra 1 or 2% on the corporation tax really harm that? Probably not in the overall grand scheme of things. And I think they'll do other things, like they've been talking about doing free ports and other things to kind of stimulate different areas into the economy. But yeah, it's interesting considering there was talk of Singapore on the Thames and 10% corporation tax rate and kind of going after Ireland and things like that. So yeah, it's definitely interesting. But yeah, equally, it doesn't sound too bad, because if they hike tax rates too high, then they'll just stem off any recovery that does occur, won't they?
Yeah, you'd imagine so. So I think that's probably why there's no talk of it, jumping up to 25% and landing there. It'll be a slow, steady thing. And you're right. I mean, as the economy gets back going after COVID, things need to happen relatively slowly just to stoke the fuel of the economy, get it going again. And I suspect, I mean, of course, my hope is that the economy starts to fly, and as the economy flies, income tax rates naturally go up, corporation tax rates or collections naturally go up because everyone's making more profit and being paid more. And actually, at that point, you can start putting a cap on these things again, and fingers crossed, bring them all down. But we're somewhere away from that, I suspect.
Yeah, and that's it. We've talked repeatedly. I think the market's now sort of positioning towards this reflation trade, and maybe longer term inflation coming back with rates staying low. And actually, if inflation comes through, that should see a push in wages to compensate, and like you say, more income tax, more corporation tax. And I think Charlie put in our director in one of his posts about, if they do increase capital gains tax, then really that's a tax on inflation. So if you've got a lot of inflation in asset prices, then you're just taxing that inflation. So that's quite an interesting concept in itself. So the spring is on the horizon, and shoots of recovery are there, and hopefully it's not too dark in terms of tax rises either. Tune in next week to find out it's all completely wrong, and there's loads of tax rises, and it's all very pessimistic. So until then, we'll see you later.